Well, good evening, everyone. This is AJ Monty, just kicking things off with our open house Q&A session. I'd like to start off with a little housekeeping note here for those who subscribe to our Trade Alert service. If you're an Equity Oracle or Option Oracle subscriber, then I'd like to bring your attention to this page, which is the WhatsApp application. What I'm doing is we're expanding our service to offer this really as an added value to the existing service, so that when I send out a trade alert, this application, although it's free, it will allow me to push the notification to your cell phone as though I'm sending you a text message. And you won't be able to respond back to the group, but it allows me to send a group text out so that everyone is getting the alert in a timely fashion. You know, if you don't have the WhatsApp app, then you'll still get your alerts, of course. They'll be mailed to you, and I put a message out on Facebook as well, on the Market Guys Facebook page, to let everyone know I sent out the alert. But last week, when we had options expiration Friday, I just put a couple of things out to the people who are subscribing to the WhatsApp text messaging, and I think it just made things a little bit clearer for those who had some positions. So if you have not done this yet, just go to excuse me, I'm so sorry, I have a little head cold here. Just go to the whatsapp.com, so it's WATSAPP.com, and you can load this. I do believe that there's a web version as well. I haven't tried that out yet, but if you load it to your computer, I do believe that if I send a message to the group, it'll be pushed to your computer as well. I just haven't checked that out yet. I do know it works on the phone, it works on the Android, it works on the iPhone, BlackBerry, you know, you name it, it works on there. So I don't want to overcomplicate things here, but once you've subscribed, then send me a message. You'll find me on the directory, just AJ Monty. Once you subscribe to the service, you'll find me in the directory, and just let me know, hey, I'm on WhatsApp, and then I'll add you to the group text so that when we put out another trade alert, you'll get that. Okay, so that's all I'm going to say about that. Finally, marketguys.com is the place to go if you want more information. If you're a new subscriber and have not yet gone to the video page, we have a library. I have some videos that are complete. We just haven't gotten them on the website yet. So I do have some new videos out there. And as I said in the last open house Q&A, if you have a particular indicator or a topic, whether it be a strategy, could be options or equities, doesn't matter, or something to do with technical analysis, it might be a question, then send it to me and I'll make a video out of it. And then we'll add it to the library. We'll give you credit if you like. I won't mention your last name for privacy reasons, but I will absolutely give you credit for the add-on, and we can continue to grow the library. I can assume that I know what you're looking for as far as financial education, but I'm not a mind reader. There might be something out there where, hey, AJ, tell me about a diagonal spread, or one of the questions that came up that I'm doing, out of all the indicators, what are your 3 favorites? So that video is done, and it's I think it's a really great way to grow this library so that you could learn the most that you can in a short period of time. Okay, let's talk about the markets. Very interesting week last week, where we had a bearish engulfing pattern on Thursday. Let me show you this. This was Thursday of last week. This was Friday expiration. Now, again, going back to the Market Guys website, there is a bearish engulfing pattern. Where is it? I know it's in here somewhere. Yeah, engulfing patterns right here. This video right there talks about the power of engulfing patterns right there, and lo and behold, on Thursday, we had a bearish engulfing pattern with a major gap down on Friday, right here, which was expiration Friday. Now, in the weekly market report, I did say, I drew this line here last Friday after the close. I did say that I believe that the market would drop lower. And I still believe that because there's a gap down below the market right here. And the only interesting thing that happened today is that we opened a lot higher. And throughout the day, if you're looking at the diamonds, we traded down on the lows pretty quickly, actually. Here, the market, let me just zoom in here. The market opened up right here at 9:30, right there. We rallied up, and right around 10:45, the markets went through a pretty major sell-off. It was pretty intense. It was a short period where for about an hour and 15 minutes we continued to sell off. Then, you know, for those who want to know about role reversal and whether it works on a daily chart, you know, or weekly chart, it doesn't matter really. The time frame, let me just erase that so we can keep this clear. The time frame here does not matter. These concepts that I talk about, especially role reversal, happen even on a minute-by-minute chart. Look, the markets opened. We found support right here. See that line, that horizontal line that I drew from that support line? Well, at 10:45, we broke down below support, and then look what happened. Support turned into resistance here. We traded down. Market came up, hit resistance again, pulled back, traded up, then it broke through resistance. Now, that role reversal, remember, is on a minute-by-minute chart. Now, I'm not trying to promote day trading by any stretch of the imagination here, but I will tell you that I know for a fact that there are day traders listening to my voice right now. And the concepts that I teach on an intraday chart are the same as what I will show you on a daily chart or a weekly chart or even a monthly chart. You know, you could see over and over again that right here even there was a resistance area that was broken that held on support right there. It's a 3-year weekly chart right there. So if I drew a line, a horizontal line right at resistance, 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 broken turns to support. Same concept. So that horizontal line that I'm talking about right now, called role reversal, is also promoted and talked about on the Market Guys website right here. You'll see that the role reversal right there is one of my favorites. I can't say it's the favorite because the gap trading is probably my favorite pattern to trade off of, but the role reversal is what allowed me to make, you know, over $1 million before I was 28 years old in the silver markets. That learning how to draw a simple, believe me, this is simple, learning how to draw a simple horizontal line connecting points of resistance and support can make you an absolute fortune because we see it over and over and over again. Look, even back here on the diamonds, resistance broken here turns to support. Now, for the real technical, I would even say analytical minds out there, they're going to say, whoa, AJ, it didn't hold right there. It broke down. It's a general area. It's not an exact to-the-penny science, although many times it does go to the penny and bounce. But it's a general area. So when I talk about support and resistance, please understand that you have to be a little forgiving with that. Even when we're talking about major markets, you have to understand that what I drew last week right here as support is a general area. Friday we closed down below support. Today, as I zoom in here, you'll see, today we traded down below support. We didn't close down below support, but I think we could. We could very easily close down below support. When we start over a series of days, start closing below support, then that means that support level has failed to hold. And then what you have to do is you have to let your eye naturally gravitate towards the next support level. So that gap right there, see that place of price void right there? That gap actually becomes a support level, because we know that through gap trading, once a gap fills, there's an 80% chance that the stock will reverse from that point once it fills. So what I mean by that is, if the stock goes down, fills the gap, there's going to be an 80% chance that it bounces, therefore forming a support level. So then when that support level forms and we see a bounce, then that might be a time for you to buy into a market or a stock. Let me give you an example. I don't want to put out any kind of confusing messages, but there was news out on CMG, which is Chipotle Mexican Grill. I don't know if you saw the news, but there's been a series of E. coli breakouts in their restaurants. I mean, in other words, food poisoning, really bad food poisoning. And, you know, when you're in the restaurant business, that's the worst case scenario. But you can see what's happened to the stock. It's literally got pounded. It went from 720 to 520. It dropped 200 points in share value. 200 points. Now, this stock is currently in free fall. Now, here's my test, and then I'll go on to analyze the other indices. Who can tell me whether or not price is more likely to go down or up from this point? And tell me why. Who can answer that? The charts are telling us an answer to that question. Who can answer that? Let's see. Lloyd? Well, which way is it favoring? Okay, down. Okay, Amelia, thank you. Volume is increasing. Ken, you're correct. Now, here's what I have to look for, and why, if you're inclined to buy a stock like this because it's low, here's why I would not buy it yet. Because we have a red candle on higher volume. Look at the volume increasing. You see? Now, be careful, because there are some people that might say, well, AJ, there's a long shadow under that candle, so that's usually a sign of a pivot point. I might buy it on that day. And you might get lucky and buy it and it could go up. But I don't like buying on a candle, especially a red candle like that has higher volume. What I would look for before I even start thinking about buying it is I would look for tomorrow to see if there's a drop in volume. So I would first look towards the end of the day and see if the volume is low. Now, follow me here. If the support level from today, that low, holds tomorrow, and at the end of the day the volume is low, I really don't care what color that candle is. If I have a higher low on lower volume, it tells me that the sellers are slowing down. And I would actually consider buying a stock like this, even though the news is bad, because eventually they'll overcome that and they'll fix the problem. You know, let's face it, if you were in the restaurant business and you had an E. coli breakout, what would you be doing? There'd be fire drills going everywhere, well, fire alarms actually, and they would be cleaning those kitchens and checking their suppliers. Believe me, those kitchens are going to be better than they ever were before this incident, and they will recover. And I'm sure their PR agent will make sure that happens. But the other thing that I look at is that there's a huge gap above the market right here. You see that? So if I am inclined to buy it because I see the sellers slowing, then I use that support level as my guide to manage risk. You see, what I teach is extremely simple. The concepts are very, very simple. That's why we embrace the KISS, Keep It Super Simple model. The thing is, you have to learn the language first before you see the simplicity behind the strategy. And that's why these open house sessions are so important to tune into, because, you know, not only because they're free, but the repetition of you hearing me over and over and over again. You got to watch for volume, watch for volume, watch for volume. That's why Ken was able to answer that question. And that's why Sophie is also, she said it's more inclined to go down because the volume is going up. Yeah. Now, we could all be wrong and it may not go down, but it doesn't mean I have to buy it, right? I'm looking for certain signals. And when I see the signal and I stick with that, I guess you could say consistent picture that I'm looking for in a stock, then again, the odds tend to go in my favor. Okay, so keep an eye on that. Oh, I'm looking at all the other answers that came in. Absolutely. Yeah. Now let's look at the same stock on a weekly chart. Now I'm going to erase all my lines, okay, because right here I'm going to remove all the drawings, because there is the only other support level that I see on this particular chart, on this weekly chart, is this low from down here. You see that? So although that's still around 475, as an option trader, and I'm kind of giving this away a little bit, but I'm going to wait a couple of days, and for the option traders, I'm looking for a bullish spread. I haven't put it out yet. I don't know if it's going to be a long call spread or a short put spread or a diagonal. I don't know that yet, but I can't put that alert out prematurely because I have to wait for the stock to perform. On the weekly chart, now you have to understand today's Monday, so this week's volume is going to be low. Okay, let me zoom in here. This week's volume is low because this is only Monday. But you could see that last week the volume slowed down to where it was about 55% less volume than it was the week before. And on the weekly chart, there is a gap. For those of you that know me long enough, you know that I love gaps. This was a gap right here. This was a small gap here. Gaps fill about 80% of the time. Bearish engulfing patterns, look, right there, bearish engulfing pattern right before the big drop. They work about 85% of the time. Look, I'm showing you the evidence over and over again. There's another bearish engulfing pattern. What happened after the bearish engulfing pattern? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 weeks in a row the stock went lower after the bearish engulfing pattern. You see, so you could see over and over again, there's another bearish engulfing pattern right there. Boom, it fell. Bullish engulfing pattern. Look at this. I get excited, but I can't help it. Look, bearish engulfing pattern, the stock dropped. Bullish engulfing pattern, the stock rallied. Now, for the investors out there that are looking for ideas for investing, all you have to do is change your time frame on the chart. See, we're looking at a weekly 3-year chart. A day trader may glance at this, but they're not going to focus their attention too hard on this because they'll look at the day chart. But if you're looking for an idea on when to buy a stock for an investment, you might want to look at a weekly chart. And if in that particular week there's a bullish engulfing pattern, well, I would buy it. I would buy it, and then I put my stop right below the engulfing pattern. And that's really as simple as it gets. So let's go back to the daily chart and let's analyze what's happening on the spiders. SPY is the S&P 500 ETF, and you can see here today we had a fairly long shadow candle. Let me zoom in. The reason I moved my cursor to the left, if you're wondering, is because you can't see this, but I have a control panel that tends to get in the way of my magnification buttons there, so I have to keep moving that. Let me just slide this over, maybe that'll help. Okay, so this day we had a big red candle on higher volume. Today we had lower volume. See this? So the S&P is giving us a little bit of a mixed signal. The S&P, now that I'm seeing this hammer pattern, it very well could go up to fill this gap right here. It could fill that gap. Once that gap fills, there's a question coming up, so get ready to answer it. Once the gap fills to the upside right here, what will generally happen after the gap fills? I talked about that a little bit earlier. Ken, you're right. You're spot on, man. You're answering that question right away. First one to come up. Michael, you're right. Sophie, you're right. James, Nathan, Larry, down. Yeah, Ann, you're all right. Amalia, Philip, wow, I'm glad. Yes, once a stock goes up to fill a gap above the market, there's an 80% chance that the stock will go down from that gap fill point. Now follow me here, and this is why what I'm telling you now is the main reasons why I am so bearish. Look at this high. This is back from, when is that? That's from, trying to get the exact date, that's from November 4th. Look at this high, very close to a bearish engulfing pattern. That was December 2nd. Look at that bearish engulfing pattern. That was from last week, the 17th. What are we seeing here? Come on, answer that. What are we seeing? 1, 2, 3. What are those? What are those? Lower highs. Thank you, Larry. Yes, lower highs. What are the lower highs followed by? Look, what's that? There's a low. What's that? There's a low. What's that? There's a low. What are the lower highs followed by? Lower lows. Yes, thank you, Stuart. Lower highs and lower lows are the definition of a downward trend. Now, I have to be careful I don't draw too many lines on this because I have to keep erasing them, because I use my charts actually I have to do the weekly market report on Thursday, but I use my lines and I leave them from the previous week so I could show everyone the evidence. But I'm going to draw this for you right now. Boom. I'm going to do this because, watch, you'll see why I'm doing this in a moment. And then I'm going to do this. What is this called? What are these two parallel lines called? Anyone? Let's see. Any answers coming up? Yes, Michael, thank you. It's a trading channel. It's a channel. It's a downward trading channel. Now, in trading channels, just like in downtrends, we do get stocks bouncing periodically. I have no question in my mind that that gap will fill. But you know what? The market could go up over the next couple of days and fill that gap, but I'm still going to be bearish. I might be bullish for the very, very short term, but long term, I'm bearish. Because once that gap fills, boom, it's going to go down, and now we have the other gap. I'm going to talk about silver. I'm just throwing this in there. I'm long silver. I think I've mentioned this over and over again to everyone. I have been accumulating silver, not so much for the trade, but more for my own economic hedge. My family and I are buying lots of silver because I'm not so confident in the U.S. dollar. I mean, there's nothing wrong with taking your money and putting it into another form of money. That's the way I look at this. But when I buy silver, I really hate it. I hate it when it gaps up. I hate it because I just bought silver back here because of lower volume. See this? It gapped up here. See? It gapped down to fill this gap. And then I said, okay, well, this gap is filled. What's it going to do? It's going to go up. But then I bought silver on this day, which was Thursday, because of lower volume and the gap fill. It went up, but it gapped up, and I'm going, no, what does that mean? Why am I so upset? Because I think silver's going to come right back down to fill that gap. So what I did is I put another order in to buy it at 13.20 because I think that gap is going to fill. What's this called? Can anyone tell me what today's price action, that candle is? That's let's see, who can tell me what that is? I know some of you know what that is. Let's see. Okay, Larry, Sophie, Amelia, Steve. Yes, James, Robert, you're all right. That's a doji. It's a sign of indecision. So what I think we could see in the silver markets, the doji usually is a sign of a pivot point. So I think we're going to see this, and then we're going to go up from there. And then at that point, I'm just hoping that there's no more gaps up. You know, you get excited because for that one day, wow, your portfolio looks great. You made a lot of money that one day. But you know it's going to come right back down. So once this gap fills, I have a buy order right there at that gap, right around 13.20 like I told you. And then you can put your stop below a support level there. But once this gap fills, now there's gaps above the market. You can see why I love gap trading so much. There's even a small gap up here, very small gap up there close to 15. Now, percentage-wise, if you're buying this stock even around 13.5 to go up to 15, that's a beautiful percentage move up there. Have it go up $1.50 on a $13 stock, not so bad. So you can trade it, but on my side, I'm going to invest in it. Why? Here's why. I'll show you. I'm not trying to convince you that silver is the place to be. I'm just showing you why I'm in it. Because look, this is a 20-year chart of silver. 20 years. What is this? That's a role reversal. Former resistance, once broken on that bullish engulfing pattern, turned into support here. So now, that support level right around 1268 is a major, major support level. That's a support level that's going back almost 7 years. So I think that once silver starts to become much more in favor, I think you're going to see the volume start to really, really accumulate, and then I think we'll see a gradual increase into these higher levels after we bounce off that support. Again, that's my forecast on silver. Same thing would apply for gold, but you know, I like silver better, not only because you can control more shares, but it's actually more of an industrial metal. It's still used very much. You know, I'm not talking jewelry here. It's still an industrial metal that is used around the world. It is consumed, and the miners are, you know, they're slowing down on production just because they don't want to put out too much production when prices are cheap. You know, their profit margins have shrunk quite a bit, so they cut down on production to save on some of their expenses, and then when prices start going up, they'll ramp up again. But the point that I keep telling everyone about in the metals markets is that, like the oil markets, when the miners cut down on their production, they create a shortage in inventory. And so the cycle will eventually come back. That's why, you know, sometimes my overconfidence can lead to some trouble eventually if you're not careful. But I'm very, very confident that, you know, we're seeing the cut down in the miners, and they're slowing down on mining the precious metals. So they're, you know, superficially they're creating their own demand by cutting back on supply. Okay, let's go and look. I want to look at a long-term chart on Russell 2000. This is the Russell 2000 index. Now, let's go over this again, and I'm going to give you some questions. What is that? You can obviously see this is a major upward trend. You see this? And you can see that the angle of the trend really falls quite in line with the same angle of former uptrends that we've seen in the past 20 years. You see the angle that I'm talking about? When, you know, if you have an old style protractor, you could probably look at that as a 45-degree angle, maybe a 50-degree angle. This too is a 50-degree angle. That's a 50-degree angle. The angles are all the same in the upward trend. But since 2009, we have not seen any kind of a major correction in the Russell 2000. Okay, so that's point number one. Point number two, can anyone tell me, let me zoom in just one click. Let's see if I can zoom in there. Can anyone tell me what this pattern looks like, or what type of a pattern is forming right here? Can anyone tell me? Let's see. Let me go back to the Q&A box and see any answers. Craig, Ken. Ken's sitting in the front row of the class. He's our model student here. He's getting right in there. Amalia, Nicole, Jerome, Sophie, Nathan, you're all right. Absolutely right. And I think the reason you're all right is because it is one of the most popular patterns. This, what I see here is happening, is a head and shoulders pattern. This is the left shoulder. Here's the head. Look at why I believe this is a right shoulder forming. We have a bearish engulfing pattern on the monthly chart. I think it's highly unlikely that we're going to end this month with anything but a bearish engulfing pattern, because we only have about a week left in the trading year. That's it. Then we go to January, and a new candle is going to start. So look back at the past. And I'm looking 20 years here now. And listen, for those of you who are long, don't get scared here. Be excited, because you could make a lot of money on the way down. Go back at the Russell 2000 and look at all of the bearish engulfing patterns that have formed. There's a bearish engulfing pattern. There's a bearish engulfing pattern. Two back to back, and then bam, sell off, followed by another bearish engulfing pattern and another sell off. Here's a bearish engulfing pattern, sell off. There's a bearish engulfing pattern that did not sell off. I'll get back to that one in a second. There's a bearish engulfing pattern, sell off. Here is a bearish engulfing pattern, sell off. Here is a bearish engulfing pattern right at the top, sell off, and now another bearish engulfing pattern. Well, if we were to go back and count all of the bearish engulfing patterns that I've mentioned, all of them were followed by a down market with the exception of one right here. Now, I never tell anybody they're 100% accurate. They're 80% accurate. 80%. So now, when I back out and I combine this bearish engulfing pattern with a possible head and shoulders pattern, this could result in a pretty dramatic sell-off for the Russell 2000. Why did I stop my line right there? Who can tell me that? Come on, interaction here. Why did I stop right there? Let's see, who wants to answer? Someone's popped. I can see someone typing. It's not coming up though. Okay. Yeah, right around 850. Why? Yes, Craig, thank you. Roll reversal. I stopped the line here because there is a roll reversal line right here. If I draw former resistance right here, former resistance once broken turns into support. So I think that the markets could very well see a healthy, maybe even a dramatic sell-off as we pull back after that bearish engulfing pattern to test the new support level. So that's the Russell 2000. And finally, Qs. That's QQQ, and then we're going to get into your stock analysis here, don't worry. The Qs, that's a NASDAQ market called, that's the power shares, QQQ. Got a little delay there. Okay, same thing, bearish engulfing pattern on Thursday. I think that we could maybe even see a little bit of a bounce before going lower because of the hammer pattern on lower volume. But we have a trading channel. Watch out below on any break below there. So if you own any tech stocks, it would be very wise for you to protect them below support levels. What you do, you'll notice that, QQQ, when you open it up and you see all the stocks that are in there, you'll see some of the more popular tech stocks. And so if you have any one of those tech stocks and now you have an alert that's telling you, uh-oh, Qs are dropping below support, you might want to get out of those individual stocks until the storm passes you. And then you can get back in on the next support level. So that's pretty much it. Now, let's see. Ron got in there. I'm going to help everyone who is not. I'll pick you first, Ron, because you put it in there. If you have a stock symbol you want me to analyze, put it in. But here's what I have to do, because we have a lot of people on this call. If I just see a stock symbol, I'm not going to grab that. So Sheldon, if you could retype that in and tell me what your thoughts are behind it. So in other words, put the stock symbol in, like Tesla, and tell me whether you're thinking about buying it or if you own it already, because then I could help you better. So retype that in, Sheldon, and I'll get to Tesla as well. Okay, so Ron is looking at AES and AES Corp, and it's trading around 916. He does not own it, but he's looking for an entry point. Now, I think, looking at this technically, obviously the stock has gone through a pretty dramatic sell-off, but you had a lower volume day today. That's positive, right? We had a bearish engulfing pattern on Thursday. That's negative. The good thing is, look at this, Ron. We're starting to see higher lows, okay? We have descending highs. So here's what I would do if I were you. Can anyone see what I'm doing here? I'm trying to fix this, but that is a triangle. So Ron, what I would do if I were you is I would set an alert over 9.5. Right? And it's a thing, for you to do is to wait until it breaks out over the upper line in the triangle. And then, you're not that far off, 9.5. And then once you buy it, you're probably going to see a move up to this resistance line. Not a big move. I don't know if this thing's going to run away and go through the roof because of what I've just mentioned. Yeah, there's a gap above the market, and if you're lucky, I think you might get a 1080 price out of it. But you have to understand this. Even if AES is looking bullish, it will suffer the domino effect if the general market starts. So, in other words, you have to be very careful of any long positions that you're thinking about here, because if the general market starts going through that major correction, like I showed you in the Russell 2000, as bullish as you think the stock is, it's probably going to sell off with the general market. So you got to be careful. So that's why last week I put out an alert to buy SDS. For those of you who were Equity Oracle subscribers, SDS was our candidate. And for those of you that have the WhatsApp app, I let everyone know that we hit the target. We hit the target last week on SDS. Why did I put that target in there? Because that was a gap fill target. See right here. The alert went out last week, right here. The bullish engulfing pattern happened here. The market went up. This was my target. We filled the target. Now, guess what? We're probably going to come back down a little bit to fill the gap. The SDS is a bearish contra fund. So if this one starts going down, it means the general market will probably go up to fill the gap, and then it'll start to go up. So these are things that I look for. So once this gap fills, let me erase my lines here. I hate to keep putting lines and then clogging it up with all the clutter there. So I'm going to get rid of that. Once SDS comes down to fill this gap, we're probably going to see that, right? Because remember, 80% of the time after a gap fills, it'll reverse. Just like this did. See, this is a gap, it filled, it's going to reverse. So SDS is a really good longer-term play for those who think the market's going to go down. Why? Because look at a weekly chart. This has been going down because the general markets have been going up. But look at, you can almost see how it's starting to form like a bowl. You can see that it's like a rounding bottom here. You can start to see it. And I really think this is going to continue to do this. Ken Tower, who was the chief market strategist for Schwab years back, and also John Murphy, they would talk very, very frequently about saucer bottoms. Saucer, like a cup and saucer. They would talk about saucer bottoms. And a saucer bottom is very bullish. And now, remember, we're talking about a saucer bottom on a bearish, I don't want to get crazy here, but it's a bearish instrument. So if we're bullish on this, we're bearish on the general markets. All right, so Ron, I know we went off on a tangent on that, but be really careful. If you buy it, you have to protect it and be sure that you're putting a stop in. Don't put a mental stop in, because that just won't work for you. Okay, so let me go to Sheldon because he retyped his intention on Tesla. TSLA. I love this this company. I think they're on the right path. What's interesting about Tesla is that their battery technology and the science behind that company is just tremendous. I promise you, Sheldon, there will be a day when I own a Tesla. I absolutely, I am so focused on getting a electric car one day. I'm just waiting for that battery technology to get absolutely unbeatable, and then I'm going to jump in. But Tesla does have a bullish engulfing pattern as of last week. Now, here's what the interesting thing is about Tesla. Usually, the economical types of cars, or the hybrids especially, they tend to go down their downtrend tends to follow the oil market. So in other words, when oil prices go down, these types of stocks generally go down. When oil prices are high, obviously people are looking for alternative fuel sources, right? So you think that would drive demand. Interesting thing with Tesla is that although the oil markets, look at oil or OIH, look at this. Look at OIH, how it's sold off. See this major sell-off here in oils? But Tesla has been unaffected by that. That's pretty bullish. In fact, that's very bullish. But with this bullish engulfing pattern, you still have to be careful because we could be seeing a double top here. See, it's not quite a head and shoulders pattern, but it does look to me like there's it looks like there's a very wide trading channel forming. Let me do it this way so you can see. Boom, do my price levels instead. There is role reversal, resistance turned to support. See, that's your support level, and here's your resistance up here at the highs. Now, we're turning up from the low here, so you have a lot of room to play in. For the option traders, this is one that I keep on my watch list all of the time. Tesla is got high volatility. It's good for traders. Sheldon, if you're looking to buy the stock, I would. Oh, I see. You're holding a call and a put. Okay, so you got the call and a put. So you got is it a straddle or a strangle you have on? Okay, well that doesn't matter. Whatever. If you have a call and a put, you just want the stock to move, and I think that you're in good shape here because last week's bullish. It's pretty close to a bullish engulfing pattern. That was on higher volume. So again, this is only Monday. This thing could go up, and if you break over this high right here, you break over those highs from the past 3 weeks, you're going to go a lot higher, and then you'll probably hit that resistance. So I would hold that, but don't hold it too long because we have the holiday weekend, which if you look at the calendar, these are long, long weekends coming up back to back. Got Christmas on a Friday, so the markets are closed half day on Thursday. So you only have 3.5 days of trading this week. So for those who are long options, that's going to take a bite out of your time erosion, your time value. It's going to take a big bite. And then the week after next is again another 3.5 days of trading. So you got 2 very long weekends back to back. Not a good time to be holding straddles. Any other time of the year, I'd say go for it. But if this thing doesn't move over the next couple of days, Sheldon, I would get out of it and then get back into it in the new year. That's what I would do, so you don't suffer any time erosion with that. So hopefully that helps you. Okay, let's see. We've got a couple of people that are looking at Apple, James and Mark. So let's look at AAPL. And holy mackerel, this time is flying by. All right. Now, these are weekly charts. I'm going to erase all my lines here so we can get fresh read on this. Weekly chart. This is a complex head and shoulders pattern forming here. You have to be really careful with this one. Now, on the very, very short term, now James, interestingly enough, you and Mark need to team up because James wants to short Apple and Mark is looking to buy Apple. All right? So here's what I'm going to predict. And I think I'm going to be 100% right on this one. One of you are going to be right. And maybe you can work out a deal between you taking the opposite side of the trade. But here's what I see. We first look at the weekly chart, all right? And you can see that there's a doji here. Doji, now again, it's only Monday, so you can't really watch the volume. There's a doji there that could suggest go higher. We have to move into the daily chart to really see what's going on. Okay, Apple looks more bullish now than bearish. Oh, let me get I got to get my trend line there. Hold on. All right, it's looking more bullish than bearish. Now, here's what I'm looking at. I'm only for Apple, and again, it's all because I think the general markets are showing weakness that Apple could go down. But short term, I think Apple is going to go and test this as resistance. Doesn't look like much, but on the chart, you're talking a 5-point move higher from here. So for a trade, that could be pretty good. So Mark, I would probably go with a long position on Apple, keeping my stop pretty close to that low right here from today's low. Now James, on the other hand, I would wait for Apple to go back up to test that resistance, and then you would take the short on a pullback from right around the 111 area. So with one analysis, I've been able to help two people. Hopefully that did help you out. All right, now Larry, SWHC. Is that Smith & Wesson? I think so. It's SWHC. I think that's Smith & Wesson. Oh, I typed in the wrong one. Let's go with that. Yeah, it is Smith & Wesson. Okay. Well, President Obama has been helping this stock out quite a bit. No kidding. I know it sounds like a joke, but it's serious. Every time he goes out for a gun grab or a gun control, these companies go through the roof. That's exactly what happened. In fact, if the politicians were really serious about gun control, they would just keep quiet about it, because every time they do it, people buy more guns. That is a fact, by the way. I'm former military. I know a lot about the gun markets, and I'm very pro-gun. And we could agree to disagree on that, but I am a big Second Amendment guy, and I have been watching this one. Now, here's what's happening. There was news out today in Vegas. I don't know if you saw this. I don't know how in the world they are trying to connect this to terrorism. I don't see it at all. There's a woman who drove a car down the streets of Vegas, killed one, injured scores of others, and it made the news as a possible terrorist attack. I don't see it as that, but Smith & Wesson is very, very sensitive to news like that. So Larry, you own you have the January 16, 22 puts. Oh, you're wanting to buy the puts? I would not be buying the puts yet. No, not yet. Here's when you would be buying a put. Hold on, Larry, right there. This support level here, a breakdown in that support is what you want to look for. And then, boom, you would look for this. See, my mind's eye is already drawing the role reversal from back here. That's how I come up with those lines. Okay? So let me explain what I just drew on the chart. You want to be buying a put when the stock is going down, not going up. Friday there was a doji. That was bullish on a support. Now that we have a candle, you have to watch. That green candle, although it was higher, was on lower volume. But you still can't buy a put there yet until it breaks down below support. So if you look at right around 21 and a quarter, a breakdown of 21 and a quarter, you'll probably see an increase in volume. Then I still would not be buying the January 16 puts, the 2016 expiration, because you don't want to be buying front month puts, because that's where you get the most time decay, number one. Number two, you don't want to be buying at the money puts. If you read my book, those are the two worst options you could buy, because those are the ones at the money, and near-term options are the ones that decay the fastest. So you want to buy maybe a January 2017 and maybe buy a 23, 24, 25 put instead. I know they're more expensive, but you won't be suffering time decay. You can hold with those positions longer. Then, when the stock breaks down below support, you then put your target, you put an alert. When it goes to 19, sell it, take your profit, run, bank your money, and then go buy silver. And then you parlay it into something better. So hopefully that helps you, Larry. Okay, again, remember, those who are just joining in, I know some of you joined late, make sure you go to the WhatsApp app. The WhatsApp application, put it on your phone or computer, and if you're an Oracle subscriber, I'm going to be increasing the frequency of trade, relative trade alerts, not just general information. I'm not going to bother you. It's only going to be relevant to what we're doing with regard to trading. So if you are an Oracle subscriber, get that on your phone. Okay. Bill is looking to short. Oh, I like that word now. More people are using that word, short. He's looking to short on FAST, which is Fastenal. Is that Fastenal? That is a stock that's been in a downward trend. So I like this. I like the lower highs. Bill, I think you need to wait just a little bit, because look, you see this? Today we bounced off of that support level. Today's low formed a fairly long shadow on lower volume. Remember, 1, 2, 3, 3 red candles on the row. Now the candle volume is low, meaning the sellers are slowing down. When the sellers slow down, the buyers speed up. So I think this could happen. If you're going to short it, I would wait for the stock to break down below 38.5 support right there. And this would be the area that you would short it with the target down here. Now, I'm watching the clock. We'll be able to get a few more stocks in. I just want to make sure everyone understands. Taking a short position is not a long-term strategy. Shorting the market is a short-term strategy. It's generally not for investors. It is usually for traders, but you do not hold this for long term. When you get in a short position, you're selling borrowed stock. As soon as it hits a support level, bam, you're out. You take your profits, you run. Then you look for the next short play, the short trigger point. You pick and choose. It's like target practice. You got to wait. And they're very, very short-lived trades that make your profits, and then you just run. So, Bill, make sure you're waiting for that support level to break before you take the short position. And then it wouldn't hurt for you to analyze the other major indices to see whether or not they're breaking down below support as well. Okay, Philip owns TIF, and TIF is Tiffany and Company. You would think Tiffany and Company would be rallying during the holiday season, wouldn't you? Because people might be spending money on gifts, jewelry, and such. Now you're long 1,000 shares, and you're long it at 75. So you're in good shape right now. However, look at the longer-term chart. Watch. Look at the weekly chart. You see this? You're in good shape now, but up here is still an unfilled gap. Now, if it fails to get up in any way, excuse me, if it fails to get up in any way, a failed rally is going to mean lower prices. So right now it looks good, and here's why. Right now, I don't want to mix the signals. The gap is positive for you. This weekly candle so far is positive for you. Can anyone tell me what this 2-day candle is right here? I know there's some more advanced technicians on the line with me right now. Can anyone tell me what that is? Let's see. Anyone looking? No one put it out there yet? Okay. Oh, yeah, good. Sophie, you're good. James, yeah. It's a harami. A harami, Japanese looked at that as what's called a pregnant candle. Here's like the little baby, here's mama, all right? So when you see a pregnant candle, harami, that is as bullish as a bullish engulfing pattern. So I think this could rally up quite a bit, actually. But you got to keep your stop very, very tight, because if you go back and look at that weekly chart, you'll see that this is a major support level right here. You see that? If it breaks down below that level, if it breaks down below 70, 76, all bets are off. You got to get out, because that one could really hurt you. Right now, it's looking bullish on the weekly. It's looking bullish on the daily. I would stay long that, but I would definitely protect it. Okay, make sure that you're protecting that position without question. Okay, Philip, hopefully that helped you. Okay, Bruce owns Disney. He's long calls on Disney, DIS, and the January 15s, you on the January 15s are gone. So you must on the January 16s, right, Bruce? Anyway, that's a front month call if you are. You long the 105s. Disney, you got a 1, 2, 3, 4. You got 5 red candles in a row on the weekly chart. So you have a stale red light. The good thing for you, Bruce, is that the volume is lower today. And let me erase these lines to help you out here. Okay, here is from this high going across. That high is a roll reversal, former resistance broken, turns to support. So that's good. That's good for you. I think that you could see a bounce in Disney, but not a major rally. I don't think that that gap will fill right away. Only because if you look at the timeline, by the time that gap fills, we'll have already been into 2016. Your calls will be expired, and the general markets will probably start selling off. So I don't think Disney's going to get back up to 118, but I do think it could bounce. I don't know what you paid for the calls, but hopefully you could salvage that trade and get out of it. Okay? All right. Now, Ken says he has a call spread on AET. Let's see, AET. Let's see, on Aetna. What call spread? Do you have the 110? Oh, you're on the, all right, 110, 111. I think you're in good shape with that one, Ken. You're in the weekly one. The reason, I mean, it looks like it broke out of resistance a little bit here today. It closed over resistance. I don't think this is going to run, but for your spread, all you want to do is go over 111. And you might just see that make money for you. I think you can make money on that one, actually. Because remember, this is a short trading week, and it probably didn't cost you a whole lot of money. So I would hold that one. If it closes right at 111, I would just get out of the position. Otherwise, you could wind up with a position. You're not careful, they'll exercise the long position, and if it's not over 111, they won't sell out of the position. You could wind up long it on Monday, so I'll close out of the position. One more, Ann. Okay, Ann is looking to buy STZ, and Ann, this will be the last stock that I analyzed tonight. Thank you, STZ. Let's see. I'm looking to buy it. I don't think this is a good buy right now, Ann, and I'll tell you why. And follow me, folks. Maybe you're running your checklist right when where I am. We had an up candle today. It hit resistance and pulled back, so we have a long shadow above the candle on extremely low volume. Extremely low. Look at that. Today's volume is only 20% of what we had last Friday. That's like nothing. And it's one of the lowest volume days over the past couple of weeks. So it's telling me that there's no buyers coming in at all with this stock. And we see lower highs forming here. See that? See lower highs. So if you have lower highs and you have a lower low here from here, you're forming a downward trend. So I would look for something better to buy, and don't fall in love with this one. If it breaks out over this high on higher volume and does something like this, boom, then you could buy it. But right now, that lower volume is a big caution flag for me. So I wouldn't jump into that one too quickly. Plus, it's an expensive stock, so you got to be careful. Okay, folks, remember. TheMarketGuides.com is the place to go for videos and educational resources. And if you are just joining us, the WhatsApp phone application is what we're using for the subscription service. For those who subscribe to the Options Oracle, Equity Oracle, we're using that as a way to communication and to communicate and send out different bits of information regarding positions we hold in the market. If you're not an Oracle subscriber, then I wouldn't do anything with that unless you want to use it for your friends and family. But it's a tool that we are using. It's free. and you can load it right to your phone or your computer. For now, this is A.J. Monte. I really want to thank you, and I want to wish everyone a Merry Christmas. Now, follow me here, folks. I am politically incorrect. I don't go with that. I believe in free speech. I'm just one of those constitutional guys. When I say Merry Christmas to you, whether you celebrate that holiday or not, that is a gift that I give you that is filled with peace and joy and happiness. That's what I mean when I say Merry Christmas to you. So please, whether you celebrate the holiday or not, take it as my gift to you. Okay? Have a great day, everyone. We'll talk to you soon. Bye-bye.
For almost 3 decades, A.J. Monte has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. A.J. is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. A.J. will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is A.J. Monte, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our Trade Alert services help answer these 2 questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have 2 services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market. and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in the service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.